Welcome to Tesla Daily News Podcast for March 26, 2026. Today, we're tracking three big themes that could move Tesla stock: regulation and autonomy progress in Europe, demand and brand pressure in key markets, and fresh labor and legal headlines that add noise to the story. First up, the autonomy catalyst investors keep waiting for. Tesla just pointed to April 10th as a new target date for full self-driving approval in the Netherlands, according to a report citing the Dutch regulator RDW, saying the process is in the final phase. Here's the context. A Netherlands approval matters because it can be a template other European countries may adopt, potentially accelerating a broader rollout. The details. This is the third date Tesla has floated, after earlier targets in late February and March did not materialize. And importantly, what's being discussed is still driver assistance at level 2, meaning the driver must supervise at all times. The impact for investors is two-sided. On the positive side, any regulatory green light in the EU is a credibility boost, and it could support higher software attachment rates and deferred FSD revenue conversion over time. On the cautious side, repeated missed dates can erode confidence, and level 2 approval does not equal robotaxi economics. Takeaway: watch April 10th closely, but also listen for what restrictions come with any approval and whether Tesla can scale it beyond the Netherlands quickly. Second, Europe demand signals are improving, but the competitive pressure is rising even faster. Industry data for February shows Tesla registrations in Europe up 11.8% year-over-year at just over 17,700 vehicles. Context: that ends a long stretch of year-over-year declines, and it arrives right as Tesla has been transitioning production toward the refreshed Model Y. Details: Tesla's European market share is cited at about 1.8% in February. But BYD's sales more than doubled year-over-year and came in slightly above Tesla, with roughly 17,954 registrations, essentially matching or exceeding Tesla's share, depending on the geography cited. Impact: investors should read this as a market that is growing for EVs overall, but where Tesla's leadership is no longer assumed. If BYD and other Chinese brands keep expanding dealer networks and pricing pressure persists, Tesla may have to defend volume with incentives, which can weigh on automotive gross margin. Takeaway: the February rebound is encouraging, but the competitive gap in product breadth and local pricing is the key risk to monitor into the next quarter. Third, Germany continues to be a flashpoint, and not just for demand. IG Metall is moving to challenge the validity of Tesla's March Works Council election at Gigafactory Berlin in Grünheide. Context: Tesla's labor relations in Germany have been tense, and works councils matter because they influence workplace rules, scheduling, and how change is negotiated at the plant. Details: the union alleges threats and intimidation during the campaign and unequal treatment of candidate lists. The reporting also references Elon Musk warning that factory expansion could become harder if outside organizations push Tesla in the wrong direction. Impact: this is not likely to hit near-term revenue directly, but it can affect operational stability, ramp plans, and expansion optionality in Europe. For the stock, it's an added headline risk at a time when investors want clean execution. Takeaway: if courts force a re-election or impose remedies, expect more scrutiny on Tesla's labor practices and potential delays for any future Berlin expansion steps. Fourth, Tesla's brand and politics risk in Germany is getting quantified. A German business report cites a study suggesting Elon Musk's political support for the AfD may have cost Tesla millions in Germany overall, even if it increased interest in some AfD stronghold demographics. Context: Tesla's European business is sensitive to consumer sentiment, and Germany is one of the most important perception markets for the brand. Details: the article's core point is that localized gains do not offset broader national-level demand drag. Impact: even small demand softness can matter when price competition is intense, because the lever Tesla often pulls is pricing and incentives, which typically compress margins. Takeaway: investors should watch whether brand sentiment becomes visible in order backlogs, leasing take rates, or region-specific inventory builds. Fifth, a big competitor project is exiting, and it matters for the EV landscape. Sony Honda Mobility is halting development of the Afeela EV program. Context: the EV market has been brutal for new entrants, and multiple legacy and tech players have backed away as costs rose and policy support weakened in some regions. Details: the planned Afeela 1 had pricing that started around $89,900, and the joint venture says it will issue refunds to customers in California who reserved it. Impact: in the short run, this removes a potential premium competitor and reinforces the moat around manufacturing scale and software integration. But it also highlights a broader reality. Demand, subsidies, and capital costs are tightening, which can pressure all EV makers, including Tesla. Takeaway: Tesla benefits when weaker programs exit, but the bigger lesson is that the industry is entering a consolidation phase where cost discipline matters as much as innovation. Sixth, a market tape check on Tesla stock. A market wrap noted Tesla shares up around 3% on the day in the context of a risk-on move tied to falling oil prices and broader tech strength. Context: when oil drops and rates ease, growth stocks often catch a bid, and Tesla tends to trade as both an auto company and a high-beta tech name. Details: Tesla's move was framed as part of a broader tech rebound rather than a single Tesla-specific catalyst. Impact: for traders, that means Tesla can continue to be driven by macro headline flow, not just company news, especially ahead of deliveries and earnings windows. Takeaway: if you are positioning short-term, keep one eye on macro risk sentiment and the other on company-specific catalysts like FSD approvals and Europe demand. Now, a quick recap. Today's key Tesla themes are: an April 10th checkpoint for FSD in Europe, a modest Europe sales rebound with BYD applying real pressure, and new labor and politics-driven headline risk in Germany. What to watch tomorrow? Any further confirmation or conditions from Dutch regulators on the FSD timeline, additional Europe registration data that clarifies whether the Model Y refresh is improving share, and any Tesla response on the IG Metal election challenge. If you found this helpful, subscribe to Tesla Daily News Podcast for your daily, investor-focused rundown. And for links to the source articles and a written recap, check our website. See you tomorrow.